this weekend we had the biggest oil shock in over a decade. Half of Saudi Arabia's production taken out like it was nothing. Cheap drones did it. But now, only a few days later, oil's a goner again. Natural gas is a goner. The whole complex is becoming uninvestable right before our very eyes. And that is the lesson of this week. The attack on Saudi Arabia initially caused the price of crude to blip up from the mid-50s to the mid-60s. Now it's back to 58, as if there never been an attack at all. When you look at the 5-year West Texas forward curve, which is the way to really judge pricing, what you can pay for it out a few years, it barely budged. It was at $50 before the drone strike. In response, it went to 52. That's it. Why can't the oil complex get any lift? You've really got a combination of powerful forces holding it back, from conservation efforts to the slowing economy to the bountiful supply of crude in the Permian Basin, a vast repository of oil in West Texas that's pushing American production up from 12 million barrels a day to 17 million in a not-too-distant future. Do you know that a decade ago it was at 5 million? The market simply can't handle all that new supply from America, which is why oil is so darn cheap in the out years. Much of the oil and gas in the Permian has been effectively trapped by a lack of pipelines. But recently, new pipe has been completed, and now they can bring that oil and that natural gas right to the marketplace. And that's the main reason why the attack on Saudi Arabia barely registered with the oil market for more than a day. I mean, sooner or later, that Permian is going to replace their supply. But that's just the tip of the iceberg. Earlier this week, San Jose, California, the 10th largest city in America, banned natural gas in most new residential buildings beginning as early as next year. They're trying to crack down on greenhouse emissions, and natural gas is a huge methane spewer. San Jose is not the first city to do it. It's just the largest. Now, this barely noticed news is huge for the complex. It tells us the future now belongs to renewable fuels. Less than a decade ago, we had major players in the industry like the late Aubrey McClendon of Chesapeake Energy or the recently deceased Boone Pickens, who pushed natural gas as a cheaper, cleaner bridge fuel than coal or oil. Something that could be even used to power cars and trucks. But the bridge fuel was a bridge too far. It didn't happen. Natural gas vehicles never really caught on. Meanwhile, even though utilities are phasing out coal, they're reluctant to build new natural gas plants when they can build solar or wind instead. By the way, that's a major reason why GE's power division is still struggling. The older money managers who are used to Middle East shocks pushing prices up dramatically, well, they live in hope that the energy complex will make a comeback. Relative to the stock market, it's about as low as it's ever been. Many oil and oil service stocks are now trading well below where they were when crude was at $26, half of where it is. Why? I have a theory. Younger portfolio managers believe that oil and gas are the new coal. Despite the Saudi fires, despite a president who wants to give car companies a break to relax fuel efficiency standards, these stocks have become pariahs. If you take climate change seriously, and most younger people do, including younger portfolio managers, then it's hard to believe in the long-term health of this industry. My charitable trust, which you can follow along at actionalertsplus.com, join the club, well, this week took a brutal loss on the stock of Schlumberger. That's one of the best companies on earth. It's the dean of the oil service space. I can't believe we sold the stock so much lower than where it was trading when oil was at half of these levels. But after a major supply shock failed to move the forward curve, we simply can't expect the oil companies to be aggressive long-term. And that's exactly what you need if you're relying on an oil service company to make you money. If you want any oils, here's my advice. I would scale back on them. If they didn't move with the Middle East burning, just imagine how they'll hold up when something bad happens to them, like a slower economy. So forget the oil patch, at least for the near future. If it didn't have a sustained move this week, I don't know when it will. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.